We do begin this hour with the breaking news and a number of headlines that impact your money.
Just seconds ago, the Federal Reserve announced it will once again leave interest rates unchanged. This is the fifth time in a row the Fed has decided to keep a pause in place. President Trump has been heavily pressuring the chair of the central bank to cut interest rates because, in his view, that would boost the economy.
As we wait for the president to comment, he is commenting on the Fed's decision. He is praising new economic numbers out today. The Commerce Department reported America's gross domestic product grew 3% in the second quarter. That's a rebound from the first quarter when we saw the U.S. economy shrink 0.5%. Economists say the whiplash could be attributed to the back and forth over tariffs. Imports dropped dramatically in this most recent quarter after surging earlier this year. Let's bring in NBC News senior policy reporter Shannon Pettypiece on all of this. Shannon, we'll start with interest rates. This decision to stay where we are was sort of expected. Bottom line, what does that mean for people maybe looking to buy a house or a car?
Right. Well, I think what a lot of people on Wall Street are now going to be listening for are sort of the remarks and the commentary that comes out of this meeting to signal whether or not there's been a real shift towards cutting rates potentially at their next meeting in September in the fall. So that's the next opportunity. So, if the Fed chairman comes out and talks about feeling a little bit better about inflation, maybe some concerns about the job market, that could give a stronger indication about rates going down in the fall. But I will caution people. I know we spend a lot of time focused on the Fed rates, but you mentioned your mortgage rate or a car loan or a small business loan. There's a lot of factors that go into setting those interest rates. One of them is like 10-year Treasury bonds, for example, and those are often linked to wider macroeconomic concerns. So even if the Fed were to cut rates, it wouldn't necessarily mean your mortgage rate would go down if there are still wider concerns about inflation or long-term spending or other economic issues that go into play with those.
And there's been a focus, of course, on interest rates, but also tariffs. The President Trump saying that he plans to impose a 25% tariff specifically on imports from India. What does that mean for consumers, particularly as smartphone production we know has shifted to India?
Yeah, that could have a big impact on consumers. And of course, it's the U.S. company importing the goods that pays those tariffs, not the Indian government. It is the U.S. company, and then they can either absorb those costs, cut costs elsewhere, or pass those on to consumers. India is a major trading partner. And as you mentioned, iPhones. Apple has been shifting production to India to sort of avoid some of those China tariffs and some of the bigger geopolitical risk around China. Well, now those iPhones could be subject to this 25% tariff if indeed those do go in effect. And the president kind of suggested a moment ago that maybe there's still some conversation and back and forth going on with India. So nothing is finalized there yet. But we also import a lot of chemicals, a lot of pharmaceuticals, fabrics, materials, even agriculture products from India. So this is a big one to watch.
All right.
We thank you for watching. And remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.